Hello and welcome. Yesterday, bulls made several attempts to drive the European currency up, thus forming an upward corrective channel. Although everything suggests a continued downtrend, the current bullish correction is necessary. As for the British pound, the price failed to get out of the sideways range. Nevertheless, market volatility remains rather high. Yesterday's macroeconomic indicators came as no surprise to market participants. The quarterly growth rate for the fourth quarter in the euro area met analyst expectations. In the United States, the trade deficit surged by 9.4% to an all-time high of $89.7 billion in January, as expected. Today's macroeconomic calendar is bereft of any important releases. Traders may take notice of data on private payrolls from France and industrial production from Italy, as well as statistics on US job openings or JOLTS report. However, these news releases will hardly have a severe impact on market sentiment. Market players are awaiting a Bank of England meeting and data on US consumer prices to be held and released tomorrow. Today, the euro and the pound sterling will most likely continue their upward movement as part of corrections and head for new weekly highs. Now, let's consider the euro-dollar pair from a technical point of view. According to the hourly chart, the levels of 1.0955 and 1.0879 act as resistance and support, respectively. A false breakout or return below a 1.0955 will create a sell signal. The principal task of bulls will be to protect the level 1.0879, the lower boundary of the ascending corrective channel. If the price breaks through this level and tests it from the bottom up, the euro-dollar pair will slide to 1.0810. Moreover, following tomorrow's data on US economy, the pair will most likely head towards 1.0772, 1.0728 and probably 1.0636. In the event of a false breakout at 1.0879, it will be possible to go long at this mark. If the price consolidates above 1.0955, I recommend opening additional long positions, counting on the correction to 1.1016 and 1.1052. At this level, traders will be able to sell the pair on a rebound, hoping for a decline of 20-25 pips. Speaking of the British currency, the pair is still trading within a sideways range. A false breakout at 1.3141 or 1.3194 will create a sell signal. Long positions can be considered in case of a false breakout at 1.385 or 1.3034. If the price consolidates about 1.3141 and tests it from the top below, the volume of long position will increase and the pound sterling will have a chance of rising to 1.3194 and 1.3244. Alternatively, if the price breaks through this level of 1.3085 and tests it from the bottom up, it will be possible to go short positions with a view to reaching the target levels of 1.3034 and 1.2976. At these marks, traders will be able to go long on the rebound, counting on intraday correction of 30-35 pips. Good luck!